You know how healthcare is always evolving, and sometimes it feels like navigating a truly complex maze.
Definitely. It can be overwhelming.
Well, what if there was a company specifically designed to simplify that, sort of acting as a crucial technology-driven backbone for medical professionals?
Yeah.
Today, we're taking a deep dive into Inventurus Knowledge Solutions, or IKS Health. They're making some significant waves in the healthcare enablement space,
Right.
especially with their Q1 FY26 financial results and some pretty exciting strategic moves they've announced.
And it's fascinating, actually. We've got a great set of documents here, an investor presentation, board meeting outcomes, and a press release.
A whole trove.
Exactly.
Yeah.
And together, they paint a really comprehensive picture, not just financial health,
Mm-hmm.
but also their strategic vision for changing how care is delivered.
Precisely. So our mission today is to unpack all of this. We want to pull out the most important nuggets so you can understand what IKS Health truly does,
Hmm.
why their latest numbers are so compelling, and what these recent leadership decisions might tell us about where they're headed.
Sounds good. Where should we start?
Okay, let's pull back the curtain. Before we get into the numbers, let's just understand who IKS Health is.
Right.
The sources describe them as a comprehensive healthcare enablement platform empowering provider organizations. What does that really mean for, say, a doctor or a hospital day to day?
Well, at its core, it means they take on the administrative, clinical, and operational stuff, the chores, you could say.
The burden.
Yeah, the stuff that often burdens clinicians. And this allows healthcare providers to really focus on patient care. That's the goal.
Okay.
If you connect this to the bigger picture, they're essentially adding this tech-enabled layer to the care delivery pyramid
Right.
to help physician enterprises, boost their revenue and cut expenses.
That really does sound like a potential game changer. Can you give us a sense of what kind of chores we're talking about, like across the whole patient journey?
Absolutely. The documents detail how they assist at pretty much every stage.
Okay.
So pre-visit, think optimized scheduling, patient financial clearance.
Getting the insurance sorted up front.
Exactly. And also their IKS Scribble pre-visit summary for charting. Kind of pre-fills the chart.
Saves time in the room.
Big time. Then peri-visit. This includes things like tech-led coding, crucial in acute settings, discharge summary, and medico-legal documentation solutions, making sure everything's accurate and compliant.
Okay.
Post-visit, they handle billing and denial prevention, very important, payment posting and denial management, concurrent and de novo risk coding, and patient AR management. Basically, the whole financial follow-up.
And what about between visits?
Right, in between visits.
Yeah.
Services like referral order management, care management in UM, utilization management, and inbox management using their tools like IKS Circax TM and IKS Stacks TM, keeping things flowing smoothly.
Wow, that is comprehensive. So what does this mean for their scale? How many healthcare organizations are we talking about, and how big is their team?
Okay, so as of Q1 FY26, they serve over 650 healthcare organizations.
650.
Yeah, and they employ a total of 12,368 people.
That's a big team.
It is. And it includes a specialized workforce, 2,260 clinically trained staff, and 502 tech-focused employees.
Okay.
And this raises an important question. How do they manage to keep customers? Because the sources say over 95% of revenues come from repeat customers.
95%. That's huge retention.
It really is. Their top 10 clients have an average vintage of over 5 years. Specifically, 5.54 years as of June 30, 2025.
So they stick around.
They definitely stick around. Demonstrates real trust.
Now, here's where it gets really interesting. The U.S. healthcare expenditure is just massive, $5 trillion in CY 2024. What's IKS Health's slice of that pie, and what's the growth potential in their specific market?
Right. So they operate within a total addressable market, or TAM, of US $260 billion.
Okay, still huge.
Still huge. Now, the part of that market that's actually outsourced was about US $34 billion back in CY 2023. And that outsourced market is projected to grow faster at a compound annual growth rate, CAGR, of 12% through 2028. The overall TAM is growing at 8%.
So the outsourced piece where they play is growing even faster.
Exactly. It highlights a really significant growth opportunity they're tapping into.
That gives us a great overview of their operations. Now, let's shift to those Q1 FY26 financial results.
Okay.
The press release kicks off with robust Q1 FY26 results. What were the key financial highlights? Did the numbers back that up?
Oh, the numbers are indeed compelling. Their revenue from operations hit INR 7,401 million,
Okay.
which is 16% year-over-year growth in rupees and 13% year-over-year in US dollars.
Solid top-line growth.
Very solid.
Yeah.
But what's really fascinating here is the profitability jump. EBITDA was up 36% year-over-year.
36%.
Yeah, reaching INR 2,378 million, which is 32.1% of revenue. That margin expansion is significant.
Definitely.
And profit after tax, Petit, surged even more, up 59% year-over-year.
59. Wow.
To INR 1,515 million. That's 20.5% of revenue landing on the bottom line.
Those are impressive figures. The CFO, Nithya Balasubramanian, she's quoted saying this reflects disciplined cost management and the scalability of our platform. How do these numbers show that their existing client relationships are really driving this growth and efficiency?
Well, if we connect this back to those sticky clients,
Yeah.
their revenue just from the top 10 customers was INR 3,213 million.
Okay.
That's 43.4% of their total revenue coming just from those 10.
So nearly half from the top 10.
Exactly. It really deepens that point about customer stickiness. Remember that average vintage, 5.54 years for the top 10, 5.52 years for the top 5.
Right.
These strong long-term relationships underpin their consistent performance. It allows them to scale efficiently.
Makes sense.
And Sachin K. Gupta, the founder and global CEO, he noted their performance reflects continued momentum and the stickiness of our integrated tech-led care enablement platform, built on those strong client relationships, scalable solutions, and disciplined execution.
It all seems to tie together. Okay, beyond the financials, the investor presentation talks about this IKS 3.0 evolution,
Right.
moving from platform provider to transformation partner. That sounds like a pretty significant strategic shift.
It does.
What are the 5 strategic pillars of execution that are driving this evolution? What does that transformation actually look like?
Yeah, this raises an important question about their long-term vision. They're focusing on 5 key things.
Okay.
1, AI native, agentic platform manifest. This means really embedding AI, launching new tools like Scribble now, developing autonomous coding for some specialties, using AI for denial prediction, patient engagement, real AI application.
Getting ahead of problems with AI.
Exactly. 2, equity acquisition, integration, and optimization, making that recent acquisition work smoothly and cross-selling services.
Standard integration play.
3, establishing leadership, being seen as #1 in AI-driven RCM coding, clinical documentation by groups like Black Book and KLAS.
Aiming for the top spots.
4, differentiated growth market strategy, winning big deals, marquee platform wins, they call them, in independent groups and smaller health systems, and using a land and expand strategy in large systems. Start small, grow bigger.
Got it.
And 5, evolution towards an outcome-oriented company. This is key. Focusing on deals tied to specific results, specific outcomes. That drives stickiness and opens up new economic pools, like their Palomar alignment with UC San Diego they mentioned.
That is a bold vision. Can you give us some real-world examples? How is this playing out with their client wins this past quarter?
Sure. The documents highlight several key partnerships that kind of show this shift.
Okay.
They expanded their partnership with Ortho NY. They're introducing the IKS virtual clinical assistant. They are adding to the RCM services they already provided. So deeper integration.
Moving beyond just billing.
Right. Then, a new partnership with Mission Community Hospital for end-to-end revenue cycle management, covering hospital acute care and ambulatory surgery, broad scope. A new partnership with Bicycle Health. IKS is managing their revenue cycle to help them scale their virtual network really fast. Shows support for new care models.
Interesting. Supporting virtual care growth.
Yeah. And an expanded partnership with a top 5 health system in the U.S. for coding services, helping them drive revenue and fix operational issues. Deepening ties with the big players.
So across the board, deeper, broader relationships.
That seems to be the theme, moving towards that transformation partner role.
Now, here's something that really caught my eye. This investment in WWMG MSO.
Right, yes.
It feels like a really big piece of this transformation partner strategy. What are the specifics of that deal? Why is it so important?
What's fascinating here is the direct financial and operational link it creates. IKS Health invested $17 million for a 48% shareholding in WWMG MSO.
MSO being Management Services Organization.
Exactly. Handles the business side for practices.
Yeah.
This MSO had a pre-money valuation of $18.4 million, and the structure means it will generate a 62.6% revenue share to the MSO itself. They describe this as advancing IKS up the value chain, moving beyond just providing services to actually sharing in the outcomes.
So becoming a part owner, essentially, in the business success.
Pretty much.
So what does this all mean in terms of tangible outcomes for WWMG and, by extension, for IKS Health's model? What are they expecting to achieve?
The expected outcomes are incredibly detailed in the presentation. It really demonstrates the value they plan to create.
Okay, lay it on us.
Revenue enhancement. They
Yeah.
project a 2% upside just from reducing revenue cycle leaks. That's found money.
Right.
A 1.52% increase in visits through better referral management. A 10% productivity gain from clinical documentation improvements.
Freeing up clinician time.
Exactly. And another 1% from the virtual clinical assistant. On the cost reduction side, big savings. 30–40% reduction in revenue cycle costs.
Wow.
20% reduction in medical assistant costs, and 10% in medical records costs.
Significant savings.
Very. And then value-based care improvements. This is critical for modern healthcare. An increase of 124 patients per primary care provider they can manage, an 8% increase in RAF scores, risk adjustment factor scores.
Which impacts reimbursement for complex patients.
Precisely. And a 6% reduction in the medical cost ratio, MCR, meaning more efficient care delivery.
Those are some very specific targets.
They are. And the structure deepens platform stickiness. There's a 30-year auto-renew contract mentioned.
30 years.
Yeah. And it enables a capital-light growth model for IKS. They can replicate this.
Okay, that WWMG deal definitely looks like a cornerstone of the IKS 3.0 strategy. Now let's shift focus a bit to leadership. There were some significant announcements from the board meeting on July 31st, 2025. Sachin Gupta, the founder and global CEO, made a transition. What exactly happened there?
Yeah, this raises an interesting point about leadership alignment for global strategy. Sachin Gupta resigned as whole-time director of the company effective July 31st, citing personal reasons. However, at the same time, he was designated global CEO of Inventurus Knowledge Solutions, Inc., USA. That's the U.S. subsidiary.
Ah, so focused on the U.S. market.
Seems like it. And he was also appointed as an additional director, but non-executive, non-independent, on the main board starting August 1st.
So stepping back from day-to-day parent company oversight, but focusing strategically on the U.S. and staying on the board.
That's how it looks. A shift in focus, not really a departure, targeting that key U.S. market.
And what about Nithya Balasubramanian, the CFO? She recently won that Best Woman CFO award. Her role changed too.
Yes, her role is being elevated. It's a clear recognition of her financial leadership and strategic input.
Okay.
She's been appointed as an additional director, but as a whole-time director on the board for a 5-year term starting August 1st.
So full-time board member.
Right, while still continuing as the chief financial officer. This really solidifies her influence, embedding financial strategy right into the board's core.
Makes sense, given those financial results. And finally, a notable new addition, Dr. Garheng Kong. His profile on the investor presentation is, well, quite impressive. What makes him such an ideal fit for IKS Health right now?
What's fascinating here is just the caliber of expertise they're bringing in. Dr. Kong is appointed as an additional director, non-executive and independent, also for 5 years starting August 1st.
And his background.
It's really unique. He's a physician, a scientist, and an engineer by training.
Wow. Covers a lot of bases.
It does. He's the founder and managing partner of HealthQuest Capital. Has a track record of 36 IPO or M&A exits.
Okay, so deep financial and deal experience.
Exactly. He's also the lead independent director at LabCorp, serves on multiple other prominent boards. His fit is highlighted by his deep financial acumen, healthcare and strategy insight, independent and governance track record, and global network and capital markets credibility.
So bringing high-level strategy, governance, and maybe capital market savvy.
Precisely. It clearly signals a focus on top-tier strategic guidance and possibly tapping into future growth opportunities, especially navigating that complex healthcare investment world.
That sounds like a really powerful team shaping up to guide the company. Any other governance points worth mentioning from that board meeting?
Just briefly, yes. Ms. KKC and Associates LLP, which is a very established Indian chartered accountancy firm dating back to 1936.
Long history.
Yeah, they were appointed as the internal auditor for FY 2025-26. Adds another layer of robust financial oversight.
Good governance practice.
And we should also probably mention IKSL's other recent awards, that ETHR World Award for Exceptional Employee Experience and the BW CFO Award for Excellence in Mergers and Acquisitions.
Right, the M&A award aligns with the equity integration point.
Exactly. It all seems to fit together: operational excellence, strategic moves, strong financials.
Okay, so let's try and wrap this all up. What does this mean for you, our listener, who's interested in the cutting edge of healthcare and business?
hmm
We've seen IKS Health deliver really robust financial results, clearly driven by strong client relationships and impressive operational efficiency.
And beyond just the numbers, we've explored their ambitious IKS 3.0 evolution, that strategic shift from just providing a platform to becoming a genuine transformation partner.
Right.
Their investment in WWMG MSO really exemplifies this. It shows how they aim to drive both significant revenue enhancement and substantial cost reductions for partners, really embedding themselves.
Getting skin in the game. Plus, those leadership changes, bringing in someone like Dr. Garhenkong, it really underscores their commitment to high-level strategic guidance for navigating this complex healthcare landscape.
Absolutely. Which I think raises a really important question for you to consider as we wrap up.
Yeah.
As IKS Health continues to deeply integrate AI and expand this transformation partner model,
Yeah.
moving beyond just services towards shared outcomes, how do you think this approach will fundamentally alter how healthcare is delivered and managed in the coming years?
Mm.
What might this mean for the patient experience, for physician efficiency,
Mm.
and maybe even for the long-term financial sustainability of healthcare systems, not just in the U.S., but globally? Something to think about.